I'm very excited to be here, and partially because we have a group of panelists here who are coming from very diverse perspectives in agriculture and investing in agriculture. And at Anchor Capital, that's always been very exciting to us, that there are different modes of being able to support and grow commercial opportunities in agriculture. So I'm looking forward to hear everybody's views on the matter today. So somewhere the panel topic says, things aren't right. But I want to start with what is right. And I'm going to ask each one of these gentlemen here of sort of what their views are. So Ramesh, I'm going to start with you. You're in the middle, so probably a good place to start. But you come with a corporate view. You've come from a company that has been in agriculture for a very, very long time. What's right for the Mahindras now? Why invest now? Why continue to invest? Let me ask you that question.
A couple of sort of ways of answering that question. The first is, obviously, as you've identified, we are a legacy investor in this business. So we have 50, 60 years of experience of being present in agriculture. It's a very key sector for the Mahindra & Mahindra group. And there are two parts to our interest. One is farm equipment, which is tractors and rice transplanters and all the other mechanization solutions for farming. And the other is our Agri Solutions business, which cuts across the whole value chain by way of inputs like seeds, fertilizers, through to soil advisory services, through to market linkage. We're building a B2C brand and so on and so forth. So we're highly invested in agriculture already. So it's kind of natural for us to think of where we take it next. So that's one part of the answer. The other part of the answer is the opportunities that we see in front of us. So it's a fantastic canvas to paint on because there are so many problems to solve, and perhaps for the first time, I suppose each generation would like to think of that, as being a very sort of lucky generation, but perhaps for the first time we have these amazing technologies which are available that at least in theory can help us unlock this huge potential with which Mr. Lokesh also spoke about. So from our perspective, to be very specific, we're interested in all manner of technologies that would sit in and around our machines. So AI, robotics, big data, analytics, remote sensors, all that sort of stuff. And also in technologies that enable new business models, like rental business models, market linkages, and so on and so forth. So that's our perspective.
Okay, so technology. And if I heard you right, you're saying that there's new technology here, you have a legacy business, you see the opportunity to bring that in and actually expand that legacy business is what I sort of see. Yeah. So I'm going to turn to some perhaps more traditional investors who are completely dedicated to the food and agri investment space. And Vipul, maybe I can start with you, right? CF has done this for a while here, right? Is today any different from yesterday? And what's the view at CF as to why this is an exciting time?
Just to give a perspective as to why we chose this sector and what we are doing. We are, like I said, we are absolutely agri and food processing sector fund, focusing on only in this sector. And we have about 9 investments in this sector across the country. So what we see is the big opportunity in this particular industry because this is one of the largest contributor to the GDP of the country and growing reasonably well. And what is happening is that, yes, there are opportunities of, a lot of challenges are being faced in this particular industry, and that gives you a kind of opportunity to solve those problems. Because if you solve the problems, there is a case for the business. So we believe that there are, enough issues that involve which needs to be solved to create more efficiency, more yields, and so on and so forth. By using a lot of technologies, like as my colleagues said, and as also Mr. Nara mentioned, that these are the kind of thing which we need to kind of do, and which is the difference between what we started doing it in 5-6 years back and what is happening now, because these are with the new technologies available. We expect things to change in a lot in the next 5 to 6 years time frame. Another aspect is that there is a huge amount of change of the lifestyle. If you see, you are now having a new fusion food, new health foods, and there are new delivery mechanisms available, and you are more inclined to go for because of the urbanizations and all that. You want to go for the semi-processed or the fully processed food. Now here again, India processes only 10% of what they are producing, as compared to much larger figure, the US and the China. They talk about 60% and 30% kind of thing. Not going into the numbers, but that gives the perspective in terms of what is the delta that needs to be filled in. So that creates an opportunity for the food processing part of it. So because of these reasons, we do believe and still are bullish about this particular sector, that in going next 5-6 years, this should do much better than what it has done so far. There are some issues why it has not done, which we'll take it up maybe down too. But we are fairly optimistic about this sector as of now.
Okay, thank you. And Venkat, maybe you could add Rabo's viewpoint on that, right? Similar kind of, larger investments, of course, but as a bank, Agri has been a very large focus.
Food and Agri has been integral to the investment ethos of Rabobank, which is possibly the global leader in food and Agri investing. When we look at this entire space, if you look at some very macro kind of numbers, food consumption in India is close to about 380 to 400 billion US dollars. With the processing side, which is primary processed and secondary processed, being about 280 to 300 billion dollars, which obviously is a huge size. And if you look at the total investment which is coming in, and if I look at pure debt, which is the RBI data from scheduled commercial banks, it's only about 35 billion dollars on a base of about 200 billion to 300 billion, which is on the processing side. So which obviously means there's a serious dearth of capital going into this sector. And even if you were to add up all the PE investment and a lot of other money which is going into this sector, there's clearly a dearth of capital. And in terms of opportunity, obviously, if you look at the entire value chain, I think farm productivity is obviously one of the biggest opportunities that we see. And we've already made investments in an agri-biotech company, we've invested in a seed company, a pesticide company, and we see that this is an area of a lot of growth. We've also been pioneers in terms of investing in the agri-infra space. We've seen investment in an agri warehousing company, which I think did very well for us, which is also exited last year. Then on the processing side, I think dairy is a sector which excites us a lot. We see huge opportunity of the unorganized to organized shift taking place, productivity enhancement at the farm level, a lot of raw milk procurement initiatives, farmer engagement level programs. The entire commodity to brand play excites us. Let's say we invested in a basmati rice company in LT Foods and Dawat Foods, and that's done very well for us again. So we like these large spaces where commodity to brand play is taking place. And also on the processing side, which is a secondary processed food, I think all of us are seeing this on a day-to-day basis, that kitchen ingredients or anything which saves time for us in the kitchen. And also the shift from the unorganized to the organized play. People are consuming higher degree of packaged branded foods, and healthier foods are becoming more important. And also we look at restaurants, QSRs. So this entire segment, I think if you look at farm to fork, obviously attention lies in the detail, but each sub-segment has got its pulls and pressures. And we believe that with a little bit more level of incisive analysis, there are a lot of nuggets, hidden gems lying across the country. And food and agri is possibly one of the most exciting investment theses that India has to offer at this point.
Okay. So Manish, my next question is going to be you. And the three deep agri-focused folks here said technology, consumer demand, actually lack of financing, and perhaps hidden gems, right? Venkat, one of the things that you mentioned. You are a sector-agnostic fund, right? So you have the option to not invest in agri and invest elsewhere. Are any of these factors that have led you to make agri investments, agri and food investments, or how do you see it as a sector-agnostic fund?
Yeah, so is this working? Not really. Okay, I'll take this. So from our perspective, as you rightly said, Ritu, we are not. There is no compulsion for us to invest in agri, but we have been fairly bullish on the sector. In fact, the entire value chain, if you say it so, from agri to QSRs and several things in between. So we've been fairly bullish on the space. So primarily, few reasons behind it. So firstly, we are sector agnostic. From our perspective, what really matters is a large opportunity and an ability of the business to capture shareholder value. So there has to be something in the business, whether an IP, a technology, distribution, brand, something has to be there to be able to capture the large opportunity that exists. And fair amount of work we have done in the space, and it's a fairly large space, and we realize that there are pockets of opportunity here where indeed shareholders can capture value, and that is what has led us to become interested in the space and look at how best we can possibly do a deal in the space. More recently, I think we have been through like any sector, we go through cycles of optimism and pessimism. I think 5-6 years back, agri was probably in demand, a lot more in demand. Everyone was talking about this is the next big thing to come. And today we see that in a large amount of pessimism has set in, essentially. And it's been a part of maybe commodity prices coming down, 2 years of successive drought, which is a fairly rare event, essentially, from if you look at a long-term average perspective. That excites us even more. When you're looking at cyclically low earnings and a pessimism on a particular sector, from an investor perspective, that excites us even more to look at the space more closely and see if there is an opportunity that exists to possibly make an investment. So it's more of an investment theme to us. To see where we can capture value and an opportune time to make that investment. That's what's exciting us the most, at these point of times. Sure.
Thank you, Manish. And last but not the least, right? I think you're the most interesting person coming from outside India, investing in agri in India. I don't know whether to call you an investor or an entrepreneur. How and why? I mean, big questions in my mind. Why are you here?
So thank you for that. Actually, we are both entrepreneurs and investors at Pioneer Ventures. From a global perspective, I think we all agree that there is a huge need in the future for better quality and safe food and also much more food, actually. I guess around 40% food increase has to happen within the next 20 years or so, and at the same time the arable land is declining on a global basis, and that's exactly what the opportunity in our eyes is here in India. It's the second largest country with regards to arable land. The productivity is extremely low. There are a lot of challenges in agriculture and the entire food supply chain, and as entrepreneurs, exactly these challenges and these gaps are the opportunities, as it was mentioned before. And the business model that we are implementing, which is quite unique in the market, is the one that we actually identify and develop and execute the projects on our own. And the reason why we have chosen this model is because with this we can directly address the big gaps and challenges that are there in the market, which have not been captured yet. And we can ensure that we can infuse our own quality standards and DNA into these projects. And ultimately also social impact is something that is very important to us. And by working on these highly relevant projects from the outset and engaging with thousands of farmers directly, investing with them and also helping them to improve productivity, we will have a significant impact on the lives of these farmers.
Why India? You could do this in Africa, large land mass. You could do this in Southern America. What made you come to India?
In our view, India is really the largest agri-investment opportunity in the world at the moment. And it's a huge country. It's almost like a continent, but there is I would say, from a systemic point of view, there is less fragmentation than in Africa, for instance. In addition to that, the founder of our company is half Indian as well, so that gave an initial spark and seed, actually, and a large sympathy for the country itself. So we are, in a sense, even myself, coming from abroad, I after 10 years in India, I feel like an Indian patriot in a sense, and I want to contribute to improving rural India and the livelihoods and modernize the entire sector.
I'll come back to you on those systemic, I'd love to understand better, when you say there are more systemic challenges or there's less fragmentation in India than there is Africa, I think that would be an interesting thing for us to explore. Okay, so we have 5 gentlemen here who are very excited about agriculture. But now what's the issue? Why not more, right? What's limiting the sizes of investments? What's limiting the quantum of investments? And why are there not 200 people here investing into it? I mean, it's a large market, right? Why are there so few people here? So Manish, I'm going to start with you, right? And if we can all talk about one point that we sort of see that perhaps limits even you guys as funds to be able to do much more. I mean, given that you invest in a lot of sectors here, is there a challenge that you see that's different in the agriculture sector vis-a-vis all the other investments that you see here that perhaps is limiting why this is not, a much larger capital inflow?
Sure. So I'm sure many of my co-panelists will talk about a lot more structural challenges and macro challenges that the sector faces. None of that bother us, to be honest, that much. What's been stopping us from making more investments, particularly in this space as of now, is more micro deal-making challenges, essentially. So to get, we like to do, so as a fund, we have a philosophy of looking at relatively underperforming businesses, taking them over and working on them to transform it through management change, through several other mechanisms that we work on. So from our perspective, to get buyout deals and do a consolidation play, which we have done successfully in many other sectors, has been a big challenge. Traditionally, the sector, for whatever reason, has not seen infusion of professional management to the extent, particularly the more grown-up businesses. I mean, there are excellent new startups that have come in with super high-quality management, but the old businesses have still been run, still have been family-run. They are not open to sell out. So it's more of a micro deal-making challenges in terms of building something, consolidating, adding something over and above that, and building a large platform. That's what we've been struggling with over the last couple of years when we are looking more closely at that sector, at this sector.
But Manish, more so than you do? I mean, all family businesses, I understand, have similar issues. But why more so in Agri?
More so in Agri, yeah. I think, it's been I think what has happened in other sectors, I've seen is there has been the businesses have opened up to sell out, essentially, right? Much early. I don't know why. What is the reason behind that? They have been, they're more open to that. They have been. There has been a much deeper penetration of professional management in many of the other sectors that we have seen. Comparatively, we've been struggling. At least, maybe we are not knocking at the right doors. That could be the reason. But we've been struggling to find that to the similar extent in this space. And globally, if you look at the agri sector, it has consolidated like anything. There's a beautiful, beautiful consolidation play waiting to happen in India, not only on the farm side, but also on the business side. But the challenge is to make it happen. The opportunity to create shareholder value is tremendous. But we've been struggling to actually execute that. Yeah. Sure.
Vipul, I want your perspective from the early stage side. Right? Can you think of one thing that's sort of limiting, the number of investments you've made or the competitors that you have in terms of making these investments? Can you double, triple your fund size? What can you do? Do you need the mic?
Thanks, Stu. Yeah, I'll talk about the macro, I think, challenge that we are facing almost across my all the industry companies, especially in the food and agri, not the restaurant part of it. So this industry is very, very, I would say, vulnerable to the seasons, and seasonality is a very, I would say, critical factor in the this particular segment. So what happens is typically, like, you need to kind of procure your material. First of all, you are highly dependent upon the, I would say, rain-fed kind of a situation. We are not, a lot of things are not irrigated. So there is a issue about the availability of the, the inputs for the processing companies. Notwithstanding that, one or two bad seasons, across the board, the prices go up. Some of the companies are exporting in other markets. They become they do not stay competitive with the other markets. Like some of my organic companies, they're supplying the organic soy processed kind of cake to the European markets, US markets. Because of two bad monsoon seasons, their prices went up like anything, and then they were not competitive in the international markets. Ukraine filled up the gap. So some other people filled up the gap. So that's one of the biggest challenge, and that also creates pressure on us by companies to get the working capital cycles, because they are a very lumpy kind of requirements. Half the companies, they need to kind of procure the material in high seasons and also store them and process it throughout the year. So 3 to 4 months are the period when you really need to procure, because otherwise, processing part is a fairly thin margin business. So that's the major macro level challenge. And third thing on top of that is that because of high inflation and all that, the commodity prices has gone up earlier years. So in fact, we prefer lower prices. When you have lower prices, then there is a better delta to be made. So high commodity prices, and even the finance cost is also very high, very, very high. The interest rates were very, very high. Now things are moderating. So now we are probably, I would say, bullish about these things. Certainly viability becomes major changes there. So those are the major challenges that we are, the macro stuff we are facing across the industry.
Okay. So Venkat, I'm actually going to ask you this for the next level here. And I'm going to make an assumption here that you face the similar kind of macro challenges that Vipul talked about. Can you speak a little more to, at your growth stage investments, right? Is there a specific challenge? Macro probably runs through all of our, investees, investments deal here.
So one thing that we've been seeing since we've been investing since 2008, the so-called low-hanging fruit in all these subsectors that I spoke of, have already seen private equity, or let's say we've been the first one that's been followed by more investment through other PE funds. So all that has been taken. So I think there's more effort required to identify the next set of players. And invariably, even if we identify that player number 4 or 5, who possibly is a good target for us, what we find is that the valuation expectation is so high that it just doesn't make sense for us. And if you look at a typical PE mindset, we would typically look at a return of 25-30% IRR. So if there is a combination of multiple increase as well as profit growth. So if the multiple arbitrage is completely taken out from the equation, and we're just relying only on profit growth, to expect a company to grow at 25-30% year on year is also going to be a tall order. We look at processed food, and many of the sectors are growing anywhere between 10 to 20%, which is a fairly good growth, given that the overall GDP is growing at about 7.5%. We're talking about 15-20%, which is good, but that's not good enough if we don't have the multiple arbitrage coming in. So obviously, that means we have to dig deeper, we have to identify more subsectors, enhance our own understanding, which is what is work in progress for us. So I don't really see it as a challenge. I would see it more as an opportunity, and you would quickly see us, doing some more subsectors which predominantly have not been touched upon in the past, and dig deeper there. And the second challenge that we face is, to create these so-called deals which are readily available on the table are going to be fewer fewer in number. So we'll have to work with companies. Maybe they're not ready right now. Maybe they'll be ready after a year or two. So we need to work with them, figure out what is going to enhance value by us working with them over the next 2 years. What kind of exits are we going to envisage 5 to 6 years from now, and how is that going to happen? If it's going to be a strategic exit we're looking at, can we start targeting or identifying those kind of players who might be interested in working with this company 5 years hence? So we need to think through the entire cycle of investment right upfront, create deals, So which is where the challenge is, and which is where also the excitement is. So I think it is interesting times right now.
But Venkat, I'm going to ask you a follow-up question to what you just said, right? And as Rabo, you probably have a lot more instruments, etc. And I guess you're representing the PE side. That's okay. But the traditional model of this 25%, 30% IRR kind of thing, and how do I create the deal? How do I create my exit? Somewhere I heard you say these are some barriers here, right? So as an institution, you have a lot more flexibility as to what you can possibly do, right? Why those not come in?
We are already doing it. In fact, we've identified some subsectors where we believe there could be increasing traction. Just to give an example, this entire Make in India initiative, where India typically does a lot of bulk exports of various commodities. Why not have that value addition happening in the country itself rather than having it at the export destination? So we are working with some kind of subsectors where we believe this can happen, and along with our global linkages in terms of either in Europe or US and other parts of the world, where we believe there could be traction. So trying to do that entire value chain creation and trying to figure out which kind of segments will really excite us. There's a lot of work going on, and we believe that in the next few years we are going to see a lot of subsegments open up, which are currently seen as maybe unbranded, commoditized. There's going to be a lot more organized play coming in many of these subsectors within food and agri. To give you an example, the spices segment, it's going to see an explosive growth going forward. Seafood is again a sector where you're finding companies are so cash rich that they are making so much money they don't need any external money coming in. So there could be a lot of newer sectors. And the other area where we feel there's going to be a lot of opportunities, the entire suppliers.
I'm going to stop you here because I want to hear about the opportunities or what you would do in the next one. So, Ramesh, yeah. Tell me, as a large corporate, right, is investment into new projects or, newer, even M&A, if you want to say that, is it just because you're a large corporate, it's difficult? I can tell you that I've been at the Mahindras many times, and the process is just such a long, slow process. Is it just because it's a large corporate and their processes and systems, or is there something else that you find as a challenge in this sector, and that investments are not where they can be?
Yeah. No, so I think that there are two sort of big things that I see from my perspective. So clearly my lens is very much, as I said, built around the businesses that we're already in and that we want to grow within agriculture, farming. Mechanization being one of them, which I'm particularly close to. So one is the fact that if you look at the outside world of startups and innovation and entrepreneurship and so on, euphoria usually happens when there are very quick successes and multiple quick successes. Something, like WhatsApp, 10 million users in 6 months. And, you have these statistics that really attract a lot of attention in every form, including money. Farming doesn't work like that because there is a big physical element, especially when I put an India hat on. There's a very big physical element to even your so-called virtual digital plays. We have a play called Tringo, for example, which is in farm rentals, and we have a telematics device called DigiSense, which we launched on our tractors, and we have an app which is called My Agri Guru, which was launched by the Agri Solutions business. And you can see this flow through not just in what we do, and I'm sure it'll resonate with a lot of startups here, that you can't show that kind of growth, partly because some of the things that Vipul mentioned, also because when you're testing new technologies, then you are at the vagaries of climate. You can't just prove something in 3 months. You have to go through the crop cycle, you have to wait, you have to test it. Adoption is notoriously difficult with farmers, not just in India. There's a case study of how in Iowa there was a farmer who used, and this is 70s or 80s, a new technology on 3 acres or 5 acres of his land, and he doubled his productivity, and it took him 15 years to scale from 5 acres to his full farm. So there are some fundamental issues here which prevent us from having these kinds of super accelerated successes. So that's a challenge, and that's a challenge which affects us as well, because, you know, in a world of phased investing and milestones and so on and so forth, they just are a little more staggered. The second thing is people. So I think that the talent pool which one can unleash on these really fantastic problems that exist to solve. This is not an issue this is not a sector which lacks problems to solve. Are they there? Absolutely. Can people see them? Sure. But do people want to get their hands dirty? Do they really understand them? You know, mostly it's, you know, sort of the urban educated audience.
But you understand this as a corporate, right? I mean, of any of us sitting here, the history and the exposure to this all is, I mean...
No, we do. To play this new game, we have to rely on an ecosystem. And when we start looking around at, you know, who can help us with this, you know, who is doing imagery analytics or who is doing big data, then we have to look globally, which we do and we will. But in India, it's still forming. I'm optimistic.
So that's from the external point of view, right? But internally within the company, right? I mean, you sit on the expertise, you sit on the ecosystem, you sit there to actually be able to test these things out and, you know, get them into, commercialize them into much larger opportunities.
Yes.
And I would say weather the risks much better.
No,
right?
we do. So, I mean, it's new for us, you know, in terms of, you know, sort of really having a serious place, or precision farming, for instance, which is something that, you know, I have a specific personal interest in my role, is an area that we strongly believe in, and it's early days for us. We've been sort of looking at this for the last few months. And that's where the first issue comes. So, you know, if one expects Mahindra to create a $50 million digital agriculture business in a year, it's unlikely to happen because of some of the fundamental challenges that I just mentioned. I mean, John Deere struggles. So, you know, they've been doing this for 15 years, right? So those would be some of the things that I see in terms of benchmarking digital progress and tech progress in agriculture in the same way that you might in another industry.
Okay. Pablo, what is the challenge that you see, right? And I would love to get your perspective from you know, the model that you use, right? And is that a challenge that you see, and do you see that growing a lot? Or what are the challenges that will limit the growth that perhaps you would like? Let's put it this way. And is there a challenge that you see that's different in India vis-a-vis what happens?
These are interesting and good questions. I think the core element really in what we see is that, especially in rural India and agriculture, execution is very hard work. And it's complex as well because you have so many different stakeholders in the process and you have very fluctuating, unpredictable parameters in building the business. So because of that, and that's to Ramesh's point, the talents that you bring into these ventures that we are also incubating, or also the talent existing in ventures that we invest into, has to be top-notch. Top-notch with regards to their business capabilities, but also very much their experience in the sector. And I think that is really the core driver. Now, the experience might prohibit innovation to a certain extent. So that's a challenge. There might be good people coming from the industry, but they are not really in the mindset of disrupting it and bringing in totally new models which are needed in order to modernize the sector. And talent in itself is quite difficult to find. And when we are building a portfolio of 10, 15 ventures, as we are planning to do in the future, finding the best people, even if the people are coming to us, but really finding the people in the market is difficult because agriculture and the related sectors has traditionally not been seen as a very sexy industry, I would say. That will change, I'm sure, but it takes some time. And in addition to that, I think...
But is that different from elsewhere? I mean, agriculture has been a traditional industry everywhere, right? So I thought you bring up a very good point here, right? That if you want to do these different things, you need the talent of the right sort.
Yes.
Right? I mean, you're innovating, you're also need how traditional businesses run. It's sort of an intersection of what I like to say is that, there's so much history in this sector that, finding the people who kind of can bring the history but think about the future is a tough challenge. But isn't that true everywhere?
Not completely.
Okay.
Because if farming as a business would be sustainably profitable, it will automatically attract talent. And I think the potential is absolutely there. Indian agriculture as a business can and has to become profitable. And there I think also the presentation from Andhra Pradesh was great, because it's all about creating the right enabling factors. Some subsidies might be needed, or loan waivers or so, but they are of course only trying to ease the symptoms, but they are not actually addressing the problem. But with these kind of measures, you can actually over time make agriculture profitable, and that will attract talent, that will attract capital, investments. So that is actually what we need to address.
So I see something, so if you talk to a farmer, no farmer wants their kids to be a farmer, right? But there are a lot of investment bankers who are going back to doing farming. So is this how you see the talent would come in, or there has to be another way?
I think it has to be a combination. These are different pools of know-how. You have to have a very savvy know-how with regards to how to do modern farming. And there is also a gap, obviously. I mean, the entire know-how pool in India has to be brought to international levels. But you also need a good business know-how. So I think that is maybe a challenge also for the government to build universities or educational institutions that bring in both elements. So modern agriculture know-how plus business skills, so that we can actually develop successful rural entrepreneurs who can fund themselves and are not depending on external financing.
I've been very interested in hearing what all of you said, so I've been terrible about cutting back on time here. But I do want to talk about the future here. So Pablo, while you have the mic, right, and can we just keep this to one point, right? What do you see as the future? Will you increase investments in India? Will you increase the number of ventures that you are actually creating in India?
Yes, we have a quite aggressive vision actually for India. So until now we have invested a little bit less than 1,000 crores into the country together with co-investors, and we want to multiply that with about 5 in the next 5 years. And to do so, we are in the process of setting up our own first fund. Until now, we have done all of the fundraising through networks and family offices and so on. And we have a dedicated team led by Marco Klinge in our office, which is doing nothing else than identifying opportunities and developing those ventures. So our target is to get to around 15 ventures in the next 5 years, and all with a focus of scalability. They have to be industrial sized, and obviously the other parameters have to be in place as well, as probably similar to what other investors here in the round would look at as well.
Great. Venkat, what would you invest in? One
would be a tough question for me to answer.
But pick the one that you take all your savings and put it into.
I'll possibly look at investing more in the value chain in terms of the quality chains that are getting built up, which are maybe suppliers to a large food service chain or a food processing chain. Because there's increasing demand for quality which is coming in, and there could be good vendors who could be catering to that requirement. And there's a huge opportunity which is unfolding here. So focused on quality, traceability. It also lends itself well to supplying to some of the MNCs and also exporting. So I think that's an area which excites me the most.
Who thinks that's not, who has another area here that they would bet on? Yes, Vipul.
I would like to invest more into the agri-tech. That's the that's the probably solution that we need to provide. Now within that, a lot of segments. I don't want to elaborate on that, And second would be the farm as a services. Because that I see a lot of opportunity, and because end of the day we are also impact investors. So beyond the financial returns, I also want to see what the impact actually makes in real life situations. So these are the two. Well, we have a lot of examples to share, but I think with a bit of time, and I don't want to take you further time on that.
And Manish, if you were to find the right, entrepreneurs willing to give up control and have you guys take over, sure. What would you pick?
Agri input remains to be a favorite of ours, essentially, primarily because if you think about it, we think about the consumer history in India, essentially, and we were such centrally planned economy 50 years ago. And all that liberalized and completely changed the consumer behavior and the opportunities for the consumer. Agri probably is the last space where that decontrol hasn't yet happened, primarily because 50% of the vote bank is there, essentially, right? But think about it, right now government tells you what to sow, what inputs to take by a complex mechanism of subsidies and price control, where to sell, through again a very complex mechanism of APC, essentially, right? And all that is slowly changing the decision back to the farmer, to the end consumer. And if he takes a rational decision, we believe the whole agri input space will see a transformation. So that remains to be a very, very exciting area for us.
So agri-tech, inputs, value chain, quality value chains. Yes. Two more.
We will never be complete in all of those opportunities, but I think from my perspective there are two additional ones which might have a huge impact on the economy, and one is financing and insurance. Yeah. Because that's something that is truly not working at the moment for about 75% of the farmers, and there is incredible potential to disrupt this system, but it requires to significantly cut the costs of both distribution and collection, and also reduce the risk of non-performing assets. And the second one is our disruptive models of farming itself, which will probably require some sort of economies of scale through a consolidation, but it has to happen in an inclusive fashion, socially responsible fashion, where in the end of the day the farmers are clearly profiting from it. But it needs also the investment from the private sector. So this is just as two additional points I would like to mention.
So yes, I was coming to you, yeah. So, but Ramesh, my question to you is different. Okay.
I'll try to
so all these gentlemen here said what their pet sub-area was that they would invest in. What would the Mahindras buy from these areas if they had to pick to make an acquisition here, right? So where would they put the money?
Farming as a service, for sure. So, to be honest, all of them, because we have these two businesses of farm equipment. And
all of the people looking for exits here.
Yeah, so agri inputs, farm equipment, farming as a service, all that stuff. So the point that I was wanting to add is data-driven farming. Yeah. So everything around that, precision farming and everything else, I think that's definitely an area.
So we haven't talked about information, right? And sort of the inefficiencies that information actually drives in this ecosystem. Yeah. So that's what you're alluding to here, saying that
absolutely. And one sort of thing that, certainly I talk to when I meet dealers and so on and so forth, and it plays off Pablo's point and other points as well on talent, is that with it's maybe a bit far-reaching, but it's worth thinking about with this group of people here. As technology gets more democratized, and you start thinking of Lego-style, technology, you have, farmers who are sort of building solutions themselves and so on. So as we can democratize it, our dealer network and their kids, and your point on young kids don't come into farming anymore. If we are able to enable them to see technology as the problem solver, they understand the problems best. It's very difficult to understand the real executional issues of farming unless you know farming and you're out there, or people like yourselves who spend years in it. Otherwise, it's very difficult for someone, if you just have a young engineering grad, it doesn't take him or her that long to figure out food delivery.
Yeah,
It's not complicated,
Right.
right? But this is. So the more we can push the knowledge of technology and the ability to use it easily, as technology is now making itself easier, that would be an interesting breakthrough.
Absolutely, I totally agree with that. I think that's something that we have to see happen here, and it's really hard to say that one small farm is going to be making these decisions in a much macro global forces without the equipment, without being equipped to actually do that. I think that's even worse to some extent than having a state manage this whole piece. And I want to thank all the people on the panel here. Thank you for all your insights. And I'm sure they'll be available later to answer specific questions if some of you have very specific questions. Thanks again, and thank you to VCCircle for having us all here.